thanks for Draper Cygnus for having us.
Yeah,
and inviting us and welcoming us into the community.
And Endeavor, I was on the board of Endeavor at the very beginning, and very excited to see how incredibly big and flourishing Endeavor has become. So thank you, Endeavor. And thank you, Draper Cygnus. You've been a great partner. These guys are really good at what they do, so invest. We're really happy to be here in Argentina. Some great companies like Stam or Stam? It's Stam in English, in Spanish, right? Stam, okay. Great companies like Stam who have gone really good deep tech, really amazing companies that have come from Argentinians with incredibly good technological education, and then they find their way to the Silicon Valley where we get to fund them too. So
yeah.
Anyway,
how's your Spanish? We're going to ask you a few questions about what Edu just said. How's your Spanish?
I heard creo que and un poco.
There you go.
So
¿Dónde está el baño?
I was actually staring there thinking, hey, how much of this do I actually understand? And it wasn't as much as I wanted to. I heard El Mundo also. I think there was a world in there at one point.
Well, I heard a lot about the transformation of Argentina, and I think it's happening. So I think you guys are right. This is really an amazing time for Argentina. So we're really excited to be here. Hopefully we get a chance to meet Mele. He's become one of my heroes because of that speech he gave to all those people in Davos who are still sort of thinking that we should all go woke or something.
Yeah.
And he basically I think he set the entire world back on track.
I think
that wasn't just Argentina. That was the entire world.
Right now, it's interesting to see how Argentina is on the headlines across the globe for a good reason, which is not something people in this room are used to. I'm going to move a little bit away from your mic.
I mean, one of my biggest wins is from Argentina, too. So I was the first investor in Reapio, and that's been a huge, great thing for Boost VC and also just getting to know the Bitcoin ecosystem. So
yeah.
I'm biased towards Argentinian builders, so please.
So the thing there is...
Actually, that's interesting because one of the things that got me even more excited about Bitcoin was talking to Sebastian Serrano.
Yeah.
Because he said, my family has made a fortune 3 times in my lifetime in Argentina, and all 3 times we've lost it to the Argentinian peso, to the government manipulating the currency. And he said,
it was a strong
Bitcoin,
pitch. Yeah.
Bitcoin is, I said, but it jumps around a little in value. He goes, oh, it's so much more stable than the Argentinian peso.
Yeah, especially if you drag it a little bit longer. So we thought about structuring this in 3 pieces. We're going to go all over the place, so it's going to be fine. But in the audience,
that's where we belong, all over the place.
So in the audience, we have investors, we have family leaders, family offices, and entrepreneurs. Yeah. So you're coming to Argentina, you're visiting. I heard your visit to Paraguay was a roaring success.
We thought so.
No, well, they think so too, apparently. The president thinks so. So I think you probably have, you and Adam, something that you come and you have in your mind when you're coming to Latin America and a place like Argentina. We'd like to hear a few minutes from you and Adam. What is the main message, given where you see Argentina, how you see the U.S.? What is the main message you think we should hear? Okay. The second part will be about what is going on in the world. You're both pro-free market. We have historic tariffs being announced, war, currency movements, interest rates. So a little bit on your view on how do you think the world is shaping moving forward, and get that AI tech view into the future. And the third part will be about your family. You're fourth generation, extremely successful in the United States. There are countless cultures with, rice paddies to rice paddies in 3 generations, shirtless to shirtless in 3 generations. You seem to be doing a good job avoiding it. So I think there might be several insights on succession, on how the family is organized, what things to do, what not.
Mostly we buy cheaper shirts.
That's it, yeah. And no ties. That seems to be the good.
Bitcoin ties. Only ties that promote.
So let's start with what we agreed on, the sense of what do you think are the top things people in this room should have in their mind given where you are and where you're coming from?
Okay, well, you hit on a lot of things there, and I'll take a shot, and then Adam can take a shot. One thing that has sort of permeated and it's become more solid in my thinking forever is really to solidify people's understanding that capitalism works and socialism doesn't, even though socialism thinks it's doing something good for poverty. The only growth in any country comes from capitalism, and that's been true throughout history. And the best test is North Korea, South Korea. The average North Korean, the average South Korean now, after 70 years of being separated by the DMZ, makes 460 times what the average North Korean makes, and that's when adjusting for purchasing power. And the average South Korean is 4 inches taller than the average North Korean. The average South Korean female is taller than the average North Korean male. That is just pure capitalism on one side and pure socialism on the other. It just works. So you guys are headed in just the right direction. The faster you can get there, the better. We had an interesting discussion. I think killing the peso is probably a good idea. Might be controversial for the next couple of years, but I don't know if you kill it or freeze it, but stop the peso. Stop the peso. And of course, I would say just jump straight to Bitcoin. Go, leap the crowd and go beyond where the U.S. is or beyond where the rest of the world is. Leap the crowd and drive a Bitcoin economy that runs on less friction than any other currency. You don't have the banks in the way, you don't have the government in the way, and you have perfect records. So taxes can be paid all automatically. You don't need we have a big IRS. I don't know what you call it here, but I'm sure you have tax people. We have accountants and auditors and bookkeepers and tax lawyers and whatever. And we don't need any of those in a Bitcoin economy. And so I think that we're headed toward that. It's just a matter of how fast we get there. And Argentina has sort of an interesting opportunity to leapfrog and get there first. And Argentina was the #1 economy 150 years ago or something in the world. And that was when it was capitalist. So be unabashed about being a great capitalist. Okay, so that's the macro thing. I don't know, you want me to answer all three of those questions?
No. I'll jump back to them.
Okay, macro, that's what I'm thinking.
I'll move more micro, I guess. I think in order to have a healthy startup ecosystem, you need people who are willing to take risk and work hard. And what was really fun about Bitcoin and me, I feel very fortunate that I was just on the cutting edge of that entire revolution, was that people in Argentina accepted the concept of Bitcoin so quickly, and there were so many people I ran into who wouldn't. And I think that just having that ability to believe that things can change, it enables this incredibly healthy ecosystem. And so if I were to like leave like one thing, if I'm saying one thing, it's invest in Draper Cygnus. Because they're fostering an incredible ecosystem of people who are willing to sort of choose the risk and take the risk. I mean, my entire experience with Argentinian founders has been incredible. I've been default global investing from day one just because I was lucky to back Bitcoin-related startups, and it turned out not all of them were in the US, and I was like, well, we got to find all of them. And so a lot of them were in Argentina, Chile, they're all over the world, Europe, Asia. It was great. So I'm very thankful for Argentinians, and yeah, venture. Invest in venture. That's what we should be leading.
Yeah, what's great about venture capital is that it does, it attracts people who might or might not have been great before, but it creates hope in a society, and it brings some of these extraordinary people to a head where they are willing to challenge the system. They're willing to try new things, and I always look at venture capital in three ways. I look for markets where they've gotten fat and lazy and providing bad service at a high cost, and if they're big, then I look for a technology that gives an entrepreneur the opportunity to challenge that industry, and then I look for people who are willing to just lay down on the sword for that business and to make that thing happen. And put those three things together, and it doesn't always work, but when it does, it's transformative to all of us. And we don't even know it, but everything you wear, everything you eat, everything you everywhere you travel, the phones, the whatever, it's all been entrepreneurs. It's all been those people that we love and try to back. And I've got to mention that the 7 biggest companies in the world were all venture backed. So this is where the economy starts. Starts with, Draper Cygnus or Boost or Draper Associates. It starts with us making sure that all those people who might have a great idea or might have a shot at doing something extraordinary can make something happen and have that little leg up. They just need, it's like, give me a year, give me 2 years. I can do something extraordinary if you give me 2 years. And too much of our world is caught up in the, just living day to day. And so if there's an opportunity to break somebody out of that and give them that year or two to go prove that they can completely transform the world, totally worth it.
One of the other traits I just want to quickly touch on, my dad touched on a few of entrepreneurs, is that to their friends and family, they're actually a little annoying because all they want to do is talk about what they are doing, and that incessant behavior of just obsession drives that innovation. They need to. It isn't a 9-hour-a-day job. It's a 24-hour-a-day job, and so they have to have that deranged behavior that often to friends and family is like wild and a little insane. Like some of my favorite founders, all they can do is talk about their company. It's just, that's it. That's their world. I once brought up like sports. Never bring up sports to founders. Like they're not following it. Like I made a joke about home runs or something, which is baseball, to a room full of founders, and I realized no one laughed. And it was because they're like, is that good? Is that bad?
It might not have been funny.
Yeah, well, that couldn't
Blame
have
it
been
on the founders,
That
right?
couldn't have
Blame
been
it on the founders. Got
That
it.
couldn't have been it.
So But Tim,
Actually, what I was just thinking, Adam at Boost has this program where he'll put small amounts into a lot of companies, and it's a relatively recent program that he's doing this, and he said these founders talk about something, and if that's all they talk about, drive everybody around them crazy. He found one that, I mean, is listening to mushrooms.
oh,
It isn't like him with an ear, but he would do that.
It's kind of like a listening.
But it's a computer that he puts on the ground, and it digs into
the. And he has a needle going into the root.
Yeah,
and it's reading changes in the mushrooms, mental health.
and all he can do is talk about effing mushrooms.
But this guy might change the world. He'll be able to anticipate earthquakes or fires or whatever just because he's a mushroom.
all those that push change look crazy at some point, right?
Yeah.
So double clicking on one point that you said a couple of minutes ago, which is, yes, VC entrepreneurs is where the economy starts. But there has to be a trigger to that, and sometimes it's capital. That time you talked about, okay, give me 1 year, give me 2 years of burn, that is capital. And you not only deploy capital, but you've seen many people deploy capital. I'd like to hear, what are the 2 or 3 main mistakes or misconceptions large fortunes, family offices, or institutionals do when deploying? Because you can either water the plant or drown the plant, right?
Yeah. Okay, you answered your own question.
Thank you for coming.
Well, that's where
we're done for the day.
The mushrooms grow when you overwater the plant. No, so this whole thing's all about mushrooms. What I think what you're getting at is, at least in the venture capital business, what I noticed was the venture capitalists, the Draper Cygnuses, the Boosts, the Draper Associates, we invest an amount of money to get these things going, grow them, and then it takes a long time, and then 15 years later, everybody thinks, oh, this is easy. And 15 years later, like, our returns are looking really great. But until then, it's like head down, keep it going. And then when our returns start looking great, then the investment bankers go, oh, you want to get into venture capital? We can do venture capital. And then they go and they grab all that money that's really meant for, Draper Cygnus. They grab all that money and they flush it into an investment banker who looks at it as a transaction rather than an investment. And I think,
not to name any names, Tiger Global, Co2.
Tiger Global, Co2, whatever, they raised, multi-billion-dollar venture funds, and then they didn't really mess with your money, but they also messed with our money, which is really nasty. But the reason they messed with our money was we'd have these companies growing, and things are going very, very well, and profitable, everything's great, and the company's going out to raise $10 million, and then Tiger Global says, here's $100 million to this company, and the entrepreneur goes, okay, I'll take it. And instead of 10 million, which is what they really kind of needed, they took 100 million. But then Tiger Global, it would have been fine if they just stopped right there. But Tiger Global then says, you've got to spend it at 5 million a month. So they're burning money. All of a sudden, this company that was profitable, everything was growing, they're burning money at 5 million a month. And the company grows a little faster, and everything's kind of going okay. But mostly companies grow at an organic pace. It grows at a rate that it's supposed to grow at. And if you throw too much money at it, it'll grow a little bit faster, but your burn rate you know, a $5 million burn rate pretty much guarantees that you're going to hit a wall, and you're going to either have to fire the entire team or you're going to go bankrupt. So we saw that happen. It was awful. So I knew it was going to happen because I saw it happen back in, you know, the dark ages before. And so I sent a high alert to every one of my companies in 2019, and I said, the money's going to be coming in, raise as much as you possibly can, and don't spend it. And so most of them made it through that period, so fortunately. And now we go to some LPs. We were having real trouble raising money last time. We went to LPs this time with this incredible record, and they're going, wait, isn't your industry down? And I'm thinking, who are you talking? You're talking to the investment bankers again.
Part of your question is about like what people misunderstand about the venture industry. And one thing, I've been doing this about 15 years now, which, whatever he says, listen to. I'm still, he's at 74,000 years, something like that, of venture capital experience. But there's something in when you're managing money. First, venture capital fails in one way where we are compared to other asset classes that actually don't really correlate, private equity or hedge funds or liquid public stocks. And we're the asset class of human endeavor. And one of the things I've learned is we are invested in, so as family offices, institutions will give us money, and that's real hard cash, that's real money. That has a liquid amount where we could give it back immediately. And then there's this money that we give back like 12 years later, right? And or 10 years later. In the middle, there's this like blind box where we're trying to articulate how much this thing is worth. We use words like IRR and TVPI and all these different words. And really, you shouldn't measure the value of that box until about 5-6 years in. And but we do want, you should, as a manager, we should be articulating what's in that box. And that's something that I think over the course of the 15 years of doing this, that's something that black box where you're trying to articulate what the value is difficult to correlate to these other asset classes until we're paying back the real money. And to my dad's point, that's sort of what happens. You end up paying back the real money when it's time. And when everything's ready, and it doesn't hit with these other these iBank asset classes that have existed. So that's something that I would say that is misunderstood about our asset class. It's like, where's it liquid? And it's very not liquid in the middle.
And at which point should investors, family offices
Actually,
invest?
there was a period there where we backed a few of these companies, and they did okay, nothing great, where they were new kinds of fintech companies that would make these early venture assets liquid and make it possible to trade. I think until it's really something you can hold on to, it's a hard thing to trade.
Yeah.
So, yeah.
Yeah.
Difficult to. Also, there's something. If you're managing assets, the one thing you're thinking is particularly if it was, handed down through the generations, it's don't lose it. And then you hear from us and you go, what the heck, these guys are out of their minds. They're putting money into mushrooms.
Well, but there is a point there. But there is a point there, right? And let me follow on that.
Woolly mammoth, we backed Colossal.
Had a huge breakthrough yesterday.
Yeah.
They hybrided a mammoth with a mouse.
A woolly mammoth.
A woolly
mouse.
mammoth with a mouse. So we got a woolly mouse now.
Anyway, they're bringing back the woolly mammoth and the saber-tooth
tiger
and whatever else. So these are things where people are going, wait, I'm going to take my grandfather's family fortune and I'm going to put it into the woolly mammoth.
But that segs goes to the next question, right? Which is, at which point investors and family offices should deploy capital directly into companies or do a process for manager selection and choose those who will deploy the money.
Over COVID, the least obvious thing to put your money into, COVID, it was like highly digital, no retail, you need things that are low cost. And so like Zoom did well, like there were all these things in the market that were doing well that were like obvious in the moment. But as a venture investor, I asked myself, what is the least obvious thing I should invest in, right? What is the worst decision I could make right now, essentially, to the market? And what I ended up on was high CapEx businesses. And so I ended up on high CapEx aerospace. That was a counterintuitive bet 5 years ago. That was a non-intuitive bet. And if I hadn't been thinking about high CapEx businesses, and this leads into when should family offices and people deploy, I wouldn't have been in 15, I had 7 companies on the Falcon 9 launch a month ago. So I had 7 companies who had payloads on the Falcon 9 launch. And I wouldn't have been in any of them. They were all within that time frame where I was like, okay, what is the opposite of what everyone else is doing right now? I think that if you're willing to take the risk on what you need to be willing, if you are a family office, I think everyone should invest direct. I think it's crazy that I get to do what I do because I love it so much. It's the coolest job in the world, and I thought that everyone else wanted to do it, and then I realized that that is not a common thought. And I think that you need to be willing to stick your neck out. And so if you are the type of person who's willing to stick your neck out and say, I'm interested in these things that no one else is interested in, you'll do great, and you should invest direct. I think it's great. Otherwise, trust people who are watching the weird things all day. I was raised on comic books and this guy. Yeah. Sorry, you go. When should they invest?
So, that's great. It's if you're thinking I want to go direct so that I can not pay a fee and a carry, I think that's wrong-headed. If you're thinking I love what this is, I want to do it, I want to do it my whole life and throw my whole life into it, then go for it because it's a great career. It's really wonderful. If you're thinking I want to dabble, you're going to probably lose your money. So I would not try to sort of game it, and I wouldn't try to dabble. I would either invest in venture capitalists who do it with their life, and I pay the fee and pay the carry, or I would throw my life into it because it is an admirable, wonderful thing to do, and it can make for a wonderful, very interesting and adventurous high-learning life. So it's one of those things, it's like, hey, do I want to take some of the family money and go create my own venture fund? And, there's a graveyard of venture funds that was just started in 2018, 2019.
Yep.
Because they all thought it was easy. So just beware. It's not as easy as it looks in year 15. It all looks great. In year 4 or 5, it doesn't look very good. And people have to have, this is going to be my life. That has to be in you.
It's one of those
if you're going to do it. Otherwise, hey, it's the highest performing asset class among all asset classes. Venture capital outperforms all other asset classes by about 8 points. It's not 8 basis points, 8 points over all other asset classes. But you are illiquid. You're dealing with crazy people who are backing really crazy people. I mean, there's some weird risks to it, and it has high volatility, but boy, hang in there a long time. We were talking to the corporate VC here. Where is he?
Yeah, but the dispersion,
And
Tim.
You got to stay with it.
The dispersion between the the top performers and the not great performers is massive. So, that difference is also very relevant in terms of how you choose, because it's not just deploying money into venture capital, as you very well say, is choosing who, or if you're going to dedicate your full life to it. If I could,
Well, there is something about that. Watch those numbers, because, the guys who run Sequoia now are not the guys who got them into Google, whatever. And the guys who are running Excel, they are not the guys who got them into Facebook. So be careful not to back history.
there's a generational change.
Well, a lot of them have generational changes, and what you've got to do is sort of look to the future and say, are these the people who know what they're doing? Are they the ones who have already figured out how to perform?
Which is a great segue to the concept of, okay, now we're deploying capital into VC. We're either doing it directly or we're doing it through a manager. What are the areas in the future? Let's look into 2035. Okay, let's paint the painting of where are we going to see the world being there, and retrace 10 years, and here we are, we're investing now. How do you see AI, crypto, freedom transitions, defense spending? Where's the space? Where do you think capital should be going now?
All of those. I think AI and robotics is going to be amazing, going from being just a dumb robot that only works on an expert system to a robot that thinks with a neural network. That's going to be huge. I think computational biochemistry, as Stam knows well, is going, and all sorts of other technologies are going to completely transform healthcare. People are working on things that are not just life extenders, but life forevers. There are, in space and transportation, I think Elon Musk has broken the logjam there. All sorts of creativity will be happening there for decades to come. And then in AI is not going to just be robotics. It's going to take on all sorts of other forms. And then Bitcoin, and I say Bitcoin, people would say crypto, but I say actually Bitcoin, because actually there's this gravitational pull toward Bitcoin. It used to have a 40% market share, then it was 50 after the next boom bust, and now it's 61. It may even be higher now that there's been a little bit of a dip. And all of the ecosystem that's being built around that, it's transforming the entire global economy. That's enormous. It's the biggest thing that's ever happened. And it leads into things like DAOs, which could be decentralized governments that could completely transform how we are governed, how we think, how we operate, how we could have liquid democracies. We could have a whole number of other things all because of that. So I think we're going into this is a major renaissance. We are about to hit, we're kind of at an inflection point where globally we're going through an anthropological leap forward where these people who are kind of trying to redelineate what a country means are really the last roar of a dying lion, because we're all interconnected. We're just humans. We're not like Argentinians and Americans. We're humans, and
We all got Starbucks.
yeah, everybody's got a Starbucks.
How cool is life today? First off, think about that. It's pretty awesome. My car drives me to work. That's crazy. So I don't know what you thought you were going to have 10 years ago, but I have a self-driving car. I have a robot in my house that's a dog for my kids, because we don't want a real dog, and it's good.
So we have what, 5
You have
dogs?
so many dogs.
I'm about to get a dog,
We
so
get
I'm
dogs.
like, I'm gonna look into that.
Yeah, it's a
robot.
robo dog.
We get dogs from all our
No
other
ongoing
children.
cost of the dog. So there's no like upkeep, no vet bill. It's just the kids. It's wandering the house. It's a little creepy. It like wanders, but and then Bitcoin. So I'll use sort of Bitcoin as my analogy for what I think that the future looks like in the next 10 to 15 years, and it was an amazing revolution to be a part of because I was able to watch this idealist community sort of become market and like become an alternative system to banking, where basically banks hit a tragedy to scale. They forgot who their customer was, and so suddenly we needed this alternative that was competitive. And because Bitcoin exists, banks are getting better. And all I want is better services to the end user. It's not that I care about Bitcoin or I care about banking or I care about any of these new technologies. It's that I want better services for everyone. And that means that we need more competition. My dad's really good about sort of articulating new waves in which competitive behavior can happen. And so right now, I think what's happening, if I were to like broaden my concept of what the Bitcoin revolution was about, is that we are creating competitive systems to every piece of government. So we have SpaceX for NASA, we have Anduril for the DoD. Right now, I think somewhere between DeSci, biotechnology, other things, is sort of the new brainstorm of the NIH, which is sort of the funding mechanism that all academic research is on. I'm sort of on a high horse trying to bring down the academic institution right now. I think that it is lying to everyone. And so I think that you will become your own doctor, you will become your own scientist, you will become your own everything. Like it is going to be a sovereign self-technology movement. And I think that that's the future. So it's pretty cool.
Ooh, become my own doctor. That's what I've been thinking.
But
you kind of need a robot operator thing.
Also, I have a
Actually,
3D printer in my house. 3D printers are magic. I don't know if you guys have one, but you should buy one. It is the coolest thing on the planet.
Well, they're going to be 3D printing the drugs that are going to be used.
Yeah, I'm gonna have one. I'm gonna have one of those right next to my desk, and be like, "Oh, I got a disease. I got cancer," and then it's just gonna be like, bzzz. "Oh, don't have cancer anymore."
And it'll be specific to you.
Yeah.
So your data, you'll have like people. You'll say to your phone or whatever, maybe your contact lenses. You'll say, or you won't even have to say it. You'll just take your contact lenses and you'll look down at your meal. It'll know what you ate, and it'll be like, no, you don't have cancer. You just, you're sick because you ate, some really bad something.
Yeah.
There is this company.
This was not Argentinian meat you ate.
Yeah.
There's a company that has that analyzes the water in your loo, in your water closet, analyzes your whatever your leftover, and then and Vivo, yeah.
Vivo.
Right, yeah.
Yeah.
So
Is that what they're doing now?
Yeah, Vivo is actually,
They're
you
doing
can
water
pee
now?
on a stick, or you can put it in the
Don't
toilet.
pee in your drink.
yeah.
No. Yeah, that would, mostly we were talking about the food going in, but,
Yeah.
coming out, it's good.
So the thing there is, many of those things you just said, you're going to be your own doctor. You have a 3D printing machine. It's going to print off your ibuprofen or whatever, your cancer curing medicine. How far are we from that? Because we were talking 10 years, but we've been hearing about self-driving cars since the 40s. And
he's got one now.
He's got one now, I agree, but it's 100 years
He
later.
doesn't, by the way.
There you go.
I have the old Tesla.
He is the first off the line Tesla.
And
New Teslas are a little
I was going to
better.
buy a new one, but the guy who I was buying it from said, "No, you can't get rid of that."
You got like the
Tesla."
8th off the line.
Yeah.
So
Yeah, that's a collectible. That's a collectible. So we're tracing to, there's a great future coming forward. There's a great innovation in technology. We should deploy capital there. But at the same time, we have the largest economy in the world imposing historic tariffs on their main trading partners. Are we retracing? Is this a new trend? Are we going hyper-local, and that will change the way companies scale across the markets? And is that going to change VC investing? Is that something that we should look into?
Well, Trump is a negotiator. He's a deal maker, and he looks.
So you think this is temporary?
He looks at all the levers he can pull, and he figures out which one matters.
Hurts.
And goes after that. And yeah, I think he's also, I'm a globalist, so I kind of want all tariffs to drop forever. But if you're a nationalist, you kind of go, oh, and you're, as president, you're responsible for your country. And in that way, you're looking out for your country above other countries. And if you're in that position, he understands the position he's in, and he's going to deal the hand that he's been dealt. But as a globalist, I would say we want the whole, we really want the whole world to be able to trade for free, because every time we put friction in that trade, we create more socialism and we create more poverty. Wealth is created by making deals. You make a deal, you're both better off. So you want to make sure that you're making as many deals as you can. Any friction to that deal is damaging to both parties.
So I have two lines of thought. One is I feel updated on this tariff thing because last night I got back to the hotel room and that was the speech that everyone was talking about.
Couldn't sleep about it.
So, and I haven't watched any of these things, so I was watching it because in my time it was like 5 p.m. And, it seems like he's just sort of equalizing it for America. All these deals were sort of high tariff. It was high tariff for us, low tariff for them. And so he's just saying, like, if we have a tariff, we're doing an equal tariff if there's a tariff. And I thought I was like, that seems like a rational, reasonable situation, like equal tariffs across the globe, which will lead more towards this idea of no tariffs. Like, hey, if we have equal tariffs. On the other side, I will entertain you guys for one more thought. I talked about this earlier, but like, what is the worst investment decision you could make today, right? Like, think about that. Think about what I was talking about before, where during COVID, the worst idea would have been a high CapEx. It still needs to be in an important industry, but high CapEx. So right now, anything that is more in the U.S., anything that is international would be an illogical move, which means that it will perform well in the time of venture. And my dad and I are in Argentina. Like, we're trying to find deals that we can do internationally because that is, to me, a very logical place to go, but it might be counterintuitive on the day because everyone's thinking about what about US today? And we have figured out how to make us the story of everything. And so go to places that are in the shadows and invest. And like, that's where you get the best deals. That's where you find the biggest innovations. That's where you can actually support human endeavor. And so I think that, again, it's not about like whatever the short-term political decisions that people who we've always, as entrepreneurs, tried to navigate around anyway, are making decisions on. It's more about finding where the best opportunities are for people to truly build great innovations. And again, Argentina seems to have all the, hard workers, big mindsets, like all that stuff. So I'm sort of just like, hey, I'm a deal junkie, okay? Like I just want to find great people who I want to partner with and help them for the long run. Politicians seem to always want us to think about them. And it's always something that I want to figure out who's actually doing the work, who's building the things, and what's in their way. And as long as the regulation becomes easier or better, bigger innovations will happen. And I think that that's what we're moving towards. We're moving towards more logical political systems. So that's exciting.
I think the deal junkie is a good way to put it. And it seems that the family has been going on deal junkies for 4 generations right now. It's very rare.
We have a problem.
Yeah.
I'm Tim.
I'm
a deal junkie.
I'm a deal junkie.
And I did 5 deals this week.
Last week I binged on deals.
I went off deals for 2 weeks, and then I'm sorry, went back on. Yeah.
But the thing there is something beyond the deals and the economy, which is everybody here belongs to a family, right? Many of the people here have children. All of them that have children want them to see them succeed. And it's very hard. It's one of the hardest things we have in nature is how to build a family, a community that goes on for generations, having coordination, having values. Your grandfather was a VC. Your father was a VC investor. You're a VC investor. Your son is a VC investor. Other of your children and a daughter are also VC investors. Could you tell us a little bit more about your family? How's it structured? What are things happening naturally? Which ones are happening by design?
We have no structure to our family.
It's a small group here.
They're kind of
You're
on
safe.
their own. But I think all of us saw how much fun the previous generation was having working. And so work is fun for us. And I think, I'll tell you get me to a beach for more than 3-4 days, I start thinking, if I were this hotel manager, I would be, because it's so much more fun and more interesting for me. I think or a place we do go, there's this raft that random people swim out to, and I go, hey, you starting a business? How about you? You starting a business? So I think there is something that we just love about it, and I think it is that pure capitalism, pure understanding of how great this is for the world, and so that we are fulfilled and we are excited about what we do and we want to do it. And I think that and then, we've been through times where we had a lot of money and times where we didn't have a lot of money, and we still keep doing it. It isn't, I think it's more just, money's sort of like, it's like, if things are going really well, it's like we're looking at those investment bankers and we're taking all the money we can, we're just not spending it. Unless we're putting it down on some human endeavor where those people are doing extraordinary things. But I started a school and I started a show. They actually cost me money, but both are bringing in more deal flow. So maybe they're not really costing.
Technically, they've made him money. Both of them have made him like a significant amount of money because they brought in a deal that he did, and then a company sold for a ton of money, and it just kept happening. Like, he'll just meet someone on a plane, and it'll be like, oh, that was the best way to get deal flow today. Yeah. One of the things I think what a lot of people ask us some semblance of this question. And I think a piece of it is, as the sort of younger generation of this, although I have 3 kids now, so it's like establishing agency in children, or where it's like the will to do things. And one of the things that we had that I'm very fortunate about is like my mom and my dad both have a great partnership, and they have a balance of power where my mom makes all the small decisions and my dad makes all the big decisions, but there haven't been any big decisions yet. Perfect balance of power, and then my grandparents. So my grandfather had an amazing wife who he proposed to after 3 days of meeting on a cruise ship, and they had a happy marriage for 70 years. And I think that those things that has been. I was very fortunate to sort of like be born into that general situation. And then what my dad's talking about, I think people would trivialize a little bit. It's like, work has never been a bad thing in our house. Like, everything's work. Like, I was raised on comic books, Monopoly, chess, and Risk, the game Risk, board game of Risk. And like,
tennis.
And tennis. Yeah, well, I would say that's the thing I pushed most, but it was there. And so like tennis I got discipline from, but the other 4 things is venture capital. Like, if you took all the average of those like 3 board games and comic books, it's like, my job's easy now. I'm like, oh yeah, that's like that superhero. I'll back it. And so and my dad always had fun with us. Like, he took the time to teach us chess and Monopoly and like, all the things that basically is my job. To the point of like being a venture capitalist and 4th generation venture capitalist, like, I wanted to be a tennis player. So the other thing that our family allows for is the freedom to pursue curiosities. Like, if I wanted to do something, if I was like, oh, I have this idea of like stringing tennis rackets as a business, my dad would be like, okay, what are the unit economics? Like, how much would you have to buy? How much string would you have to buy? And how many rackets would you have to string? And how much time would that take? How long does it take you to string a racket? And then all of a sudden you're like, I don't want to do that anymore. And so like it was a freedom to pursue that stuff. And everyone in my family, like my brothers, my sisters, we all had that. Like, we all had a curiosity that we tried to pursue. And then we came back to, I'm interested in how the whole world works, and venture capital is the best funnel for that. It is the best funnel to figure out what the pulse of the world is at any given moment. I get to talk to the best person in the world in any industry all hours of the day. That is like my entire job. It is the coolest media, and it makes you incredibly optimistic about the future. So that would be my.
Yeah, I would add that we have a pretty good sense of what's going on 5 or 10 years from now. We really have no idea what's going on today.
Yeah.
Because of the people we're talking to are these visionaries who are saying, this is what the world looks like, but it's in their head what it's going to look like.
It seems that what you're saying is the innate motivation that is being fostered across the generations is the key driver of culture in the family. Well, those families that don't have it that organized, there's full of recipes to try to create infrastructure around it, right? Yeah. Code of ethics of the family, family charter, family council, family meetings, rights into the family business if you comply with certain things. None of that exists on the Draper family.
We
started to do family meetings, like once a year.
Family meetings.
Yeah, once a year.
We don't have a code of ethics. Ethics change. Over time, ethics change. You have to be aware. Different ethics in different parts of the world, too. You have to understand other people and how they look at ethics. They will evolve. And so writing them down only hamstrings the family. And I was sort of thinking, I've thought about, because I'm my father's administrator of the will, and I thought about my own and what I would do. And I'm a little bit torn. I've got this amazing business, several businesses that I've started that I want them to be able to do something with. On the other hand, I want them to be able to do what they want to do. You got to let them go. So if somebody wants to grab it and do something with it, great. Otherwise, let me just push
but
it out
actually,
there.
my dad's there is sort of like there are two rules in our family. Okay, so like there are two rules. So huddle in for a second while you listen to the most important
Top
thing.
secret.
that you're
Let's
gonna
cut the
hear.
cameras off.
The first rule is that there are no rules. And the second rule is next basket wins. And that's basically everything about our family in a nutshell. That is like, right? Like, if I were to like boil it down, I think that like every game we will play for 20 minutes or 3 hours. It is next basket wins. And sometimes that drives you nuts. But it is actually a cool habit at the end of the day. And then, and I've instituted it with my children. And then, I mean, it's basically like no rules, because no rules, you start to figure out how to do side deals. You start to figure out how to, like, you throw stuff at them, like, well, our basketball games are very violent and there's no out of bounds. Like, it's basically just like MMA with a ball. And it's, so I would say those are
There are some natural rules that happen. And I learned that when we played death ball. We have a game called death ball. It's basketball in the pool with no rules. Yeah. And we got the basketball and we were starting to push each other around. And then I thought,
Death Bowl does have its own rules. There's like one extra, there's one more rule.
Well, let's just let it go. Let's just sort of see how this goes. Because, normally the parent comes in there and says, okay, guys, that's enough.
Stop punching your brother.
Yeah, right. But it evolved, and everybody kind of understood they didn't want to do anything to anybody else that they wouldn't want done to themselves. So there's sort of the golden rule. And it somehow worked.
Well,
it was like an amazing game.
One guy broke his nose during one of these, and so then there was one additional rule, which is during death ball, wear goggles.
Yeah, you have to wear goggles.
So that's the other part. Yeah. So wear goggles during death ball, and then those two rules. But we're even loose on those. Like it's.
Yeah, because sometimes people play death ball without goggles.
Yeah,
but it's
because when you don't have goggles, like you're still gonna play.
Yeah.
No rules pool basketball.
You're not going to miss out.
Yeah. So yeah.
So.
Also money was never the thing. Like money's not the goal. Like that was never the goal. So.
Yeah, it's if you've got a lot, you got more to do. You got to work harder.
Yeah. So sometimes.
Yeah, absolutely.
Yeah. So sometimes you're like, okay, well, in order to do that, I need this money. So I have to get that money, and so then you go around and you ask a bunch of people for money. Yeah. Like that was.
Get those basic unit economics straight, right?
Oh my God. Yeah, no, you don't want to be a tennis stringer. It would be Although, maybe there's a way. Robotic tennis stringers.
There you go. So, you were going into a struggle that many families have on their transition, which is, okay, I want my kids to do their own thing. I want them to pursue their own dreams. But there's this massive thing that I've built. I don't want it just to go away. Some, they put it into a foundation, and it keeps going. What do you think can go wrong doing that? And what you've seen, if you have, you've seen other friends do things, you don't need to name names or anything like that, but what things do you think go wrong and that the Draper family hasn't been doing wrong?
Well, if you do that, the person who you pass it on to can really screw it up. You build something on capitalism, you might hand it off to a socialist and you don't even know it. And I think that there's...
You raised a socialist, right?
I've been lying in wait,
Oh, well, if it's a family member, whatever. They can do whatever they want. They can think whatever they want. But I've seen that happen.
Oh, you mean in foundations, right? Yeah.
Yeah, I've seen it happen with foundations, seen it happen with businesses that, communications businesses. the spirit of the business moves, changes. And also, there is this, when somebody is handed the responsibility for a family office, a lot of them are more concerned about not losing their job than they are about maximizing the assets and trying to make it a big success. And so that they make decisions based on fear instead of opportunity. And as we all know from Dune, fear is the mind killer.
Is that what you all got from that movie? Not Zendaya? Okay.
Zendaya was a real benefit.
Yeah.
I've read 35 Dune novels, but that movie was
great.
Really great because we watched Zendaya for the entire
The
movie.
entire movie.
Adam, you were great-grandchild to a legend, grandchild to a legend, son to a legend. On the works, as he says.
In my own mind.
But has that been a weight? Has that at some point played against you? And the second part of the question is, which things have you learned from your father that you've needed to unlearn to make your own path in life?
Well, I think was it a weight? No. But that might have been because they didn't make it a weight. It was like, first off, venture capital wasn't like big. Like, let's, put it back in perspective. Like, venture capital wasn't like a big asset class. When I was growing up, it was like, what does your dad do? And I was like, what does he do? He helps small companies, and they're like a banker, and I'm like, yeah, sure, like a banker. And I did, I don't know, that was all the way through high school. I was basically doing that, and I went to boarding school. But on the weight thing, it's like, he worked hard, and he made money for him. And that doesn't mean it's like my money. Like, I don't get that money. That isn't my money. And so I think a piece of it was just like distancing from the work that he did. And I think all three of my siblings have that same agency where it's like, hey, okay, so if you work hard, you sometimes get money. And that seems like a good thing to be able to continue to do what you want to do. On the legend piece, yeah, they're legends. They're great. Like, but I think a part of venture capital, I think a lot of people try to blind you in success of entrepreneurship and a bunch of other things, making you think that it's about like intelligence or something you don't have. And I always knew I could beat my dad in chess. So like, I knew I could play this game. So I would say like those two things. Well, you had an actual follow-up question to the legend part of it.
Yeah. Well, to the part of did you have to unlearn from your education or from the example of your father or your grandfather? Because you even wrote a book about your breakfasts with your grandfather. So you have a very close relationship. Have you had to unlearn some things in order to make your own path?
Yeah, I tried to unlearn everything. So I would say the things you learn are the things that are like action-based, not told. Like, I don't remember anything my dad told me to do. But I remember all the things where he was there when I had a problem or a question. And then the enablement of being able to take a risk. I went to my parents when I was a junior in college, and I said, I'm not ready, junior in high school, and I said, I'm not ready for college. And they took it really well. Like, they listened, and then they went back, and they didn't give me an answer right there. I don't know what they talked about. Like, that was my mom making whatever the call was. And then they came back out as a united front, and they said, well, you have to do something. Yeah. And that was very empowering. Like, I was like, oh, it could be anything. And so I'd been playing a lot of tennis that summer, and I've always been a pretty good tennis player. I was like, how good could I get? I'd say like each phase of my life was about answering a very specific question that I had in my head. And I was good at tennis, but I wasn't a tennis player. And if any of you were tried to go pro in tennis, that's a very big difference. Like my identity wasn't wrapped up in it, but I was a good tennis, like I was good at tennis. And I learned that, but I only got there because I committed 9 straight months of 8 hours a day of training to doing that. And so I think, you know, you're a makeup of like who you are, your family, your institutions, and like discipline. And I think I learned discipline by myself, and that was the hardest part of the journey. And then the rest of it is just like I kept being given great family, great friends, great institutions. So I would say that would be it.
So to close, room full of investors, entrepreneurs, what would you say their role in the world should be in the next 5 years? If they could look forward and say, okay, we're living towards that 2035 view. This is what the role of the people in this room should be in the next 5 years.
Follow your instincts. I mean, you got a life to lead. You got families to operate with. You got businesses to drive. You've got lives to lead. You've got adventures ahead. Just go do all that.
Go get them.
And have fun.
Oh, yeah.
So I'll add that. And then one of the things that I'm starting to see in young people, old people, all people, is that they somehow like cap what they think they're able to do. Like, and I've seen people do like crazy things. So like I know that everyone is uncapped on the upside. And so it's one of the questions, like I would go home and I would write like your actual biggest ambition on a piece of paper. And then you don't need to show it to anyone, but you at least have a North Star of like decisions you can make towards something that make you move forward. And I think that that's like a really good thing to do. Not like big, or just like bucket lists. Like I have a bucket list, you have a bucket list. Like, you know, it makes you try stuff every year and then you learn things from trying those things. Like I cornered the market on a very specific comic book. Like that was one of my bucket list items. I learned a ton. Learned a ton about cornering the market. Now I'm on the board of the comic book company that I was cornering the market on. Like, it brings you to random places and then you learn and you try to develop. So I would say like, do things. Do things. There.
Yeah.
I said the same thing.
You know, the cool thing about the bucket list, well, those are two things. One is the North Star. It's like, where am I going? How am I going to get there? All that stuff. But then you're on a track. What the bucket list is, it takes you off the track. And somehow you get better at when you're back on the track. It takes you on some other path, and then you're back on the track and you've got some new knowledge, and it propels you forward. So those two things work very well. I would make a bucket list. That's a good idea.
Yeah.
I think that's a good idea.
Make a bucket list. Yeah, I think I have like 50 things on it, and I've done an oddly large number of them. It's great.
Time to grow it back.
Yeah.
Thank you so much.
Thank you. Great question.
I got it.
I have a bigger butt than most people who use this.